All right, I'd like to break down a little bit for you on paychecks and taxes. Where does all the money go when the government takes money out of your paycheck? Are you going to get some of it back? Are you never going to get it back? What do they use for taxes? Like, what does that go to pay? And then also, at the very end of the video, I have a nice little online calculator that can kind of help you predict how much your paycheck's going to be, what you're going to bring home, what you're going to pay in taxes, etc. So let's dive right in. First off, we're going to focus on like a high schooler's income. We might take a look at a couple examples too if you're a little bit further along in your career. But let's start off with the federal income tax, the U.S. government. So we have what's called a progressive tax system, meaning that as you make more money, you end up paying more taxes. And then just kind of keep in mind right now, it says standard deduction is $12,500. So this is going to come into play in a little bit. But for right now, for this year, $12,500 is what we're going to use. And let's kind of look at this tax table. So as I break this thing down, it's for single individuals, where this is where we'll focus on for high schoolers, is if you make up to $9,950, you're going to get taxed 10%. All right, so that's how much they're going to take out. Once you go over $9,950, that next chunk of money up to $40,000, so between these two, are going to get taxed at 12%. And then as you make between $40,000 all the way up to $86,000, $22,000, and so on and so forth. So you can see if you're somebody making $1 million a year, any income over this amount, over $523,000, will get taxed at a higher percentage. So you're really not in a certain, you hear adults say, oh, I'm in this tax bracket. You're actually getting taxed over several brackets. So I want to kind of give you a quick example over here to the left. So I said, let's look at somebody that's making $50,000 a year. So if you're making $50,000 a year, the very first $9,950 is going to get taxed at 10%, which would come out to be this much money, $995. Now, your next $30,000, which is basically the amount you've made in this bracket right here, that portion is at 12%. So you'd pay this much in taxes. And then the last little bit, between $40,525 up to $50,000, that last, $9,000 here is going to get taxed at 22%. So you would pay this much money. So when you total up all three of those, you would have $6,749 taken out of your federal income taxes. Now, if you actually do the percentage and you do how much was taken out divided by how much you made, it actually ends up only being 13.5% because it was a combination of all three of these, which the majority of it, $30,000 of it, was only at 12%. So when they say you're in a certain tax bracket, that means the highest portion of your wages are at that bracket. And basically for married people, they just double all these numbers. So you'll notice, like, if you make $86,000, if you double that, well, a married couple could claim this much. And it's kind of how they do the tax bracket. Now, the big thing I want you to understand is you are going to get some of this back in a refund. And that's a whole separate issue. There's so many loopholes and so many laws, but you can get refunds back in your taxes based on the number of children you have, the different exemptions and deductions. So for instance, up above where I told you that we had a $12,500 deduction, that really means that you're not going to pay taxes on that $50,000 because they're actually at the end of the year going to say, you know what, we're going to deduct $12,500 for living expenses. We really only need you to pay us taxes on $37,500. So they're going to recalculate all these numbers. And again, they'll do the first $99.50 at this percent. And then they'll do the next, well, they won't even do the next $30,000 because right there would be $39K. So you'd never even clip into the 22% bracket for what you actually owe. So they're going to take it out of your check, but you're not really going to owe it. And that's going to make you end up getting a refund at tax time, which is always nice. Now, some things that you're never going to get a refund on are what's called FICA. Your employer and you both pay these, and there's no refund, but you will get to collect this later, maybe, if Social Security is still around. But right now, the employee pays 6.2%, and the employer pays 6.2%, for a total of 12.4% in Social Security. Now, Social Security is kind of a forced retirement account. Basically, the government takes this money out, they invest it and do all kinds of things with it, and then later on, when you turn 62, when you're 62 years old, you are eligible to start drawing on your Social Security. And it depends on how much you put in. If you didn't really make a lot of money during your lifetime, you're not going to get as big a Social Security check as somebody who's paid in more money. Now, there's a max income of $137,000. So for anybody that makes more than that, they stop taking it out of your paycheck. So Social Security is capped up to $137,000. At that point, they don't take any more of the 6.2% out. And then there's all types of rules with Social Security. You could wait until you are like 70. You'll get more per paycheck. So as long as you say, hey, I don't really need it yet, I'm going to wait a few more years, they'll give you more money per check if you wait longer. And then the other part is Medicare, Medicaid. This is a smaller percentage. You will never get that back in a refund. However, when you're older, or it kind of helps go for people that don't have insurance or children that are living that don't have insurance, Medicare, Medicaid helps elderly people and people that are struggling a little bit with health care. So that may come back later in your lifetime for you. We'll see. So that's federal money. If we go down here lower, we'll look at what do federal income taxes pay for. So federal income taxes, here's kind of the pie chart. So we have 16% is going towards defense, security, so you're talking military things. 23% is going to pay out Social Security. You have 25% is paying Medicare and Medicaid and CHIP. I'm not exactly sure what that is, but something to do with healthcare. Safety net programs would be like low-income housing, food assistance, things like that. And then 8% is the interest on our debt because our government is borrowing money at an unbelievable rate, and we have to pay interest on our loans. So that's 8%. And then that blue section is made up of some other things: transportation, education, science, federal retiree and veterans benefits, things of that nature. So that's federal, that's U.S. government. So that's part of your paycheck that comes out. The other part that comes out of your paycheck is the state of Michigan. So first of all, let's see how the state of Michigan gets their taxes. I chose 2019 because 2020 is kind of too crazy with coronavirus, and it's not something that typically happens. So I tried to pick more of a typical year. So in 2019, this is the tax money that the state of Michigan brought in to spend off of. So 36% was income tax. So that's what gets taken out of your paycheck. So I'm going to kind of go in here and write a couple things. So this is for Michigan, remember. So Michigan also takes money out of your paycheck. They take 4.25% of your income, and that makes up a pretty big chunk of all the money that the state brings in. Sales tax, when you go to the store, you go to the grocery store, you go to McDonald's, we pay a 6% sales tax on clothing, shoes. You know, you buy a car, you buy a boat, you buy anything except for like food that's not prepared, you're going to pay 6% sales tax. Well, that's about a quarter of all the income that the state of Michigan brings in. So they make a lot of money off of sales tax. Then you have motor vehicle and fuel. So every time you put gas in your car, that gasoline is taxed. Your license plate tabs on your car are taxed. Your driver's license you pay for is taxed. Property taxes, those are your home taxes. That's this little sliver right over here. Use tax, I believe a use tax would be things like cigarettes, wine, beer, liquor. I'm not 100% sure, but I'm pretty sure that's a use tax. And then you have some sort of business and corporate income tax over here. But the lion's share, the big part of the state taxes are paychecks, and sales tax, okay, down here. And let's kind of see. So the 4.25% is what's taken out of your paycheck. So Michigan does not have a progressive tax. They don't tax you different percentages based on how much you make. It's just a flat 4.25%. Now their standard deduction is $47.50. So we'll talk about that a little bit further down. Now, what does the state spend their tax dollars on? So this was in 2019. This is kind of the pie chart. So the big portion is Health and Human Services. So this is what, like Governor Whitmer, when she declares her budget and what they're going to spend money on. And actually, I got to scroll down a little bit to see that green part down there. The green is education. So try to get it all in the graph here. Maybe I'll have to shrink my sheet just a teeny little bit. There we go. Now we can kind of fit it all on there. So Health and Human Services, most of this for the state of Michigan, most of this cost is going to be Medicaid and Medicare, all right, that type of stuff. It also goes for food stamps, things like that. Food stamps, welfare, Medicaid, some hospital stuff, like all that type of portion. Education is down here, so this would be all your schools and universities. That's 27% of the pie. Health and Human Services was 41% of the pie. Transportation, so this is what we would spend on like the roads and the workers who work on the roads, all that big heavy equipment, the pavers, the dump trucks, all those type of things. Public safety and corrections, this would be police, fire, prisons, things of that nature. And then there's all these other little pieces that I'm not going to kind of break down into, but there's all these other little slivers. But those are the big pieces there. Health and Human Services, schools, roads, police, fire, prison, that kind of stuff. All right. So now that you kind of have an idea of why they're taking out the money, where it's going, how much is taken out, we're going to go to this paycheck calculator. It's called Smart Asset website. So I'm going to click on here, and we're going to actually go and look at some sample paychecks. So this thing's kind of nice the way that it's set up. And this is what your assignment tomorrow is going to be based on. I'm going to give you scenarios of people making a certain amount of money, a certain amount of hours, and you're going to tell me the amount of taxes that are being taken out. So if we kind of go, let's just look at a typical high school kid. And let's say that we're an hourly employee. Let's say that we're making $11 per hour. Now you have to decide, how often do we get paid? Do we get paid weekly? Most people, a lot of jobs that the high school kids are telling me, they're getting paid bi-weekly every 2 weeks. So I'm going to select bi-weekly, which it didn't change. Now it says bi-weekly, so make sure it changes before you start calculating numbers. So we're making $11 an hour. We're getting paid every 2 weeks. And then we want to know how many hours per pay period. So that would be hours for every 2 weeks. So let's say you're working, let's say 15 hours a week. So for 2 weeks, your paycheck would be for 30 hours. So that's, remember, this is not a week, this is per pay period. And then I'm going to just click down here somewhere, and it will calculate, it'll give me some numbers. So let's kind of look at these numbers, and I want to kind of highlight what they represent. So if you were to just straight up calculate, most people, if you were to say, hey, I'm making $11 per hour, and I'm working 30 hours, that means I get $330 every 2 weeks. So that's what's right here, and that's called your gross. Your gross paycheck is how much just total, if nothing was taken out, how much you would make. Well, your take-home pay, which the fancy word for take-home pay is your net pay. Your net is how much you're actually bringing home. This person's actually bringing home $280. So if you subtract those two, it looks like $50 were taken out to cover all these various type of taxes. Now, it's kind of nice because it breaks it down for you. So if you come over here and we're like, well, where the heck is this $50 going? We can click on details and we can say, hey, the federal income, 5.57% or $18 is going towards the federal income tax. $6 is going towards the state income tax. So this, you are going to get a decent amount of that back. You know, if you think about it, the federal standard deduction was $12,500. So as long as you make under $12,500, you're going to be getting almost all of this, maybe all of this, back. And almost all high schoolers are making under $12,500 a year. So you're going to get almost all your federal back, or a pretty good chunk of it. You will get some of the state income back, but down here, the FICA and the state insurance taxes, those you're not going to get back. So if we click on the details for there, this $25 for Social Security and Medicare, that will not be coming back to you. That's going to disappear. These other ones, there's nothing there. So we can kind of see that you're actually bringing home about 85% of your salary. And of that 15%, you're going to get a pretty good chunk of that back. So it's very important that you file taxes. You don't have to file taxes if you make under like $12,000 a year. But you should, because otherwise the government's just going to keep the income tax and not give it back to you. So you definitely want to file your taxes to get some money back. Let's look at a couple more scenarios. So on tomorrow's assignment, I might say, hey, what about the kid making $13.50 per hour? Oh, not $163.50. That'd be a bunch. What if you're making $13.50 per hour, and let's say you're getting paid every week? I don't know why I click on it twice. You get paid every week, and let's say that you're working 20 hours a week. So 20 hours per pay once a week. I click on it. This kid's making $270 a week, but they're bringing home about $222. And then you can see, you know, this FICA, this stuff over here, this $21, you won't get that back. That's bye-bye. You'll get it back when you're in your 60s. But this other part here, this 20 and this 8, you're going to get a portion of that back when you file your taxes. So you'll definitely want to do that. Now let's look at maybe as you get older, you get a job that's on a salary. And let's say you're like, well, I'm making $60,000 a year. And when you're on salary, I don't know, let's say you're getting paid, we'll leave it at every week. If you're getting paid every week, $60,000 a year salary, you'd be bringing home about $864 a week. And then you made $1154, taxes came out of it. Some of it went to Social Security and Medicare, some of it went to state and federal. And then there's a lot more things that start coming into play. It's not quite this simple, especially when you start a family. You get more money back for children, for different things having to do with your house. There's different write-offs. So taxes get really complicated. And if you don't know what you're doing, most people usually hire a tax expert. But this at least gives you a general idea of how much you're going to bring home. So you're going to use this website tomorrow. I will give you 3 or 4 different scenarios, and you'll be answering questions about how much federal income, state income, Social Security, and Medicare will be pulled out of each paycheck. All right, and over here I put single because you're not going to be married, and I left the allowances at 1 because we're not going to act like we have any children or other dependents. We're just claiming 1 for ourselves. So I kind of trying to make this really simple since we're just getting started. So hopefully this helps you understand paychecks and taxes a little bit better. See you.